Spot trading on Binance refers to the process of buying and selling cryptocurrencies in the spot market. The spot market is where cryptocurrencies are traded for immediate settlement, meaning that the transactions involve the actual exchange of assets, such as Bitcoin, Ethereum, or other cryptocurrencies, at the current market price. Binance is one of the largest and most popular cryptocurrency exchanges in the world, offering a wide range of cryptocurrencies for spot trading. Here's how spot trading on Binance generally works. Account setup. To start spot trading on Binance, you need to create an account on their platform. This involves providing your personal information, verifying your identity, and setting up security features like two-factor authentication, 2FA. Deposit funds. After setting up your account, you'll need to deposit funds into your Binance account. You can do this by transferring cryptocurrencies from other wallets or by depositing fiat currency, like USD, EUR, etc., using various payment methods supported by Binance. Trading pairs. Cryptocurrencies are traded in pairs on Binance. A trading pair consists of two cryptocurrencies, with one being the base currency and the other being the quote currency. For example, in the BTC, USDT trading pair, BTC, Bitcoin, is the base currency, and USDT, Tether, is the quote currency. This means you're trading Bitcoin against Tether. Placing orders. Binance offers various types of orders, including market orders, limit orders, and more. A market order is executed immediately at the current market price, while a limit order allows you to set a specific price at which you want to buy or sell. Once you place an order, it goes into the order book until it's matched with a corresponding order from another trader. Execution and settlement. When your order is matched with another trader's order, the trade is executed, and the cryptocurrency is exchanged at the agreed-upon price. The purchased cryptocurrency is then credited to your Binance account. Withdrawal. After you've completed your trades, you can withdraw your cryptocurrencies to external wallets or other exchanges, as needed. It's important to note that spot trading carries some risks, including price volatility, security concerns, and potential regulatory changes. Make sure to educate yourself about the market, trading strategies, and security practices before engaging in spot trading. Keep in mind that cryptocurrency markets can be highly volatile, and prices can change rapidly. It's recommended to do thorough research, consider your risk tolerance, and only invest what you can afford to lose. If you're new to trading, you might also want to consider practicing on demo accounts or starting with small investments until you become more comfortable with the process.